Okay. All right. So sounds like you're going to be mostly using the Roth IRA. Are you going to be needing to take out some funds for living expenses for retirement, or are you still going to be working a few more years? Do you know yet?
I'm still working. I'm
Uh-huh.
primary, I'm still going to be working for a number of years. I mean, I'm working remote right now because of COVID. I was able
Yeah.
to do what I did. But who knows how long that'll last. I mean, so far it's going pretty good.
Yep. So since you're
But
59 and a half, you're able to start taking contributions from your earnings. But if you don't necessarily need it, I wouldn't do it. And
yeah,
also,
exactly.
if you are still working, I would still contribute into the Roth IRA as long as you can, just so you can
Uh-huh.
have as big of an account as you can, possibly when you do need to take it out later on. So as long as you have earned income, you're able to contribute to the Roth IRA. It doesn't matter how old you are in order to
Yeah.
do that. Okay.
And that's what I did. I had a little bit of a law where I couldn't put any money in just because of expenses,
Yeah,
kids, college, and all that. But
yeah,
now that I'm making a concerted effort to, to put that max in, and I can do the max because I'm over 50. So, uh, I'll be doing that for 2023, and as long as I can do it, is I'm working, my wife's working, so that's the plan. So,
yeah. That's good.
yeah, and I just want to trade in it. I mean, I'm not going to really take anything out of that as long as I have income coming in from other sources.
Right.
But who
Yeah,
knows
that's a
what
good
the
idea.
you
So,
know
you're probably looking for ways to try to grow that account, obviously, in order to have a decent account size so that when you do retire and you are taking out money, to have some sort of plan to be able to take out that money reasonably, where you're not actually taking out your principal. You might have to take a little bit of the principal depending on how much you actually need to take out per month. But depending on, like, when you look at a lot of financial advisors, they say you could take out about 4% of your account in any one year. And then as long as you're doing it in a pretty reasonable, like 60-40 mix in most cases, where 60% of it's stocks and 40% is bonds. In most years, you'll be okay in around a 3 or 4% withdrawal rate. What I've been noticing is if you do these option strategies with relatively stable companies, so if you're looking at dividend growers, if you look at the dividend achievers list and the dividends champions, and there's all these different lists of different companies that consistently grow your dividends. If you try to sell covered calls against it as well, and just try to eke out an extra, 2-3% a year on it, I think most people could reasonably take out about 5 or 6% in most years. So you can kind of eke out a little bit more of a withdrawal when you get to that point, which is definitely another thing to consider when you're at that level, when you're able to actually need to take out that money. But for now, yeah, using cash secured puts, using covered calls is probably the main way to grow the Roth IRA. I'm not sure. Are you able to do credit spreads in the Roth?
I believe so. Yeah, because I've
Okay.
I've done a few with your recommendations, your daily
Yeah.
recommendations. I've done a couple. Yeah,
Okay.
I had to get it set up,
Yeah, because it depends on the
but I was able to
brokerage. I
do it.
use Schwab and they don't let me do spreads on it, but I could do the cash secured puts and covered calls. So I'll do the credit spreads on a separate brokerage account. Um,
Okay.
in terms of, so your main investing vehicle will be the Roth IRA, you'd say, for the next, say, 5-6 years or so.
Well, that's the vehicle I'm going to use to implement like your strategies and somebody else's strategies. I mean, I sort of
Okay.
have that account earmarked for that, and
Okay.
then I have like my employer 401k and stuff like that,
Okay,
which,
good.
I'm limited there.
Yeah. But then
And
that's
then,
good because you have a lot of different baskets that you could take out money from as well. And then Social Security will be there for a certain amount
right.
as well. Are you more in tune with the cash secured put side or the credit spread side or a little bit of both? It doesn't really matter to you? Or is there one that you like leaning on more than the other?
Uh, what would be ideal? And I remember you saying something, one of your thing, and you just mentioned it briefly earlier. The key is, I think, for me, is to get like well established, like blue chip dividend paying, where I can eke out, the cash report puts, if, or maybe if it's not like $300 a share,
Yeah,
the covered call option and stuff like that. It's like anything else. The key
right.
is knowing which stocks to pick and your risk management, knowing when to cut your losses, so it
Exactly.
doesn't get, because I've been down that road. I've been through the tech wreck of 2000 where, you know, like EMC and AOL is like, oh, this is the bottom. Oh, it can't get any lower than this. It can't get, and then they're all done 85, 90%. And you're sitting
Yeah.
there like, oh, I should have got that, you know?
Yeah, that makes sense. So one way to go is to, I'll put it on the chat. This is the dividend aristocrats list. I think they're 25 years of consecutive increases in dividends. Yeah, at
Uh-huh.
least 25 years. So some of these are like the bluest of blue chips that you could find. If you're aware already about what dividend growers are, when companies are able to make a profit, there's a few things they could do with those profits. One is they could grow it back into the business. Those are mostly growth stock companies like Amazon and whatnot.
Mhm.
Some could buy back shares of stock, which is similar to a dividend. If you own shares of stock and then they're buying back shares, you own a slightly higher percent of the company. And then there's the dividends where they essentially don't really have a great place to put their money, so they're going to give it back to the shareholders. Shareholders really like dividends because they know that it's coming in, every quarter and whatnot, and they especially like it if it grows their dividend. So if you look at the link there, I sent the current dividend achievers, and
Hey,
I've
Lance,
heard of a
Lance,
lot of these before, right?
if you're recording this and you're going to send it to me, will I be able to go back and will that link be active on the recording?
Yeah, I'll just send
And
it on your Discord too. That's fine.
okay.
Yeah, I'm sharing my screen right now, so you should be able to see on the list here when we get to it. So one of the, I would say for a fairly medium slash long-term approach to this is to look through some of these companies and then
Mhm.
see, do you think that it's adequately priced right now? Is it still overvalued, even though a lot of these might have taken a pretty big hit in 2022? Or do you think it's even undervalued? Okay. And there's a few basic fundamentals you could do to look at that. You can look at the payout ratio. That's essentially what percent of their profits are going back into dividends. In general, you want a lower payout ratio because then they have plenty of money to give to dividends. You want to look at their earnings per share over time. Has it been growing or staying steady? Website for that is Seeking Alpha is a pretty good source for it, and you can use the free version for it.
Mhm.
So for
Yeah,
instance,
I
I
think I
just
have. I
saw
think I have Seeking Alpha on my phone and stuff and
so
under
I
my
just saw
finance.
ED, which my mom actually worked at in the 1980s, and she has a lot of shares of it. And it is a dividend achiever. It's a electric company in like New York, New Jersey area. So
Okay,
if you look at
like a
earnings, this
utility.
is a utility. So the earnings aren't going to be
Yeah.
great from year to year, but as long as you can see like a pretty steady, let's see, earnings summary.
Yeah, the other thing I would probably do is, maybe go to like I haven't been to a public library down here where I'm at now, but maybe go see a Value Line Investment and just
Yeah,
see what their thoughts are on it. You know what I mean?
right. So little things like that is like if you think that it's about fair price or appropriately valued, you can look into possibly selling a cash secured put very
Mhm.
close to in the money if you think the current price is pretty fair. So ED is
Mhm.
a little bit more expensive, around 95. If you look at say Coca-Cola, KO is around 63. Some of these you could find between 100 or less in the share price. So if you think, say, Coca-Cola is pretty fairly priced at around 63.80,
Mhm.
I would look to sell around a zero point 0.2 to zero point 0.3 delta. So you want to go a little bit higher delta on these than what I normally recommend because they're not going to pay that much in the very low deltas.
Yeah.
If you look at, say,
Would you
KO,
would you
25
say
days
would you
from
say
now.
Lance the Delta you look for around what?
So normally when I'm looking at the stocks that I'm recommending, I want lower deltas because I'm
Uh-huh.
going with a little bit riskier stocks. But if you
Right.
want to look at this in terms of a medium slash long term approach, I would look at the higher deltas for the dividend companies. Around zero point 0.2 to zero point 0.3 or so delta is a good sweet spot for that.
Hmm.
So right now, 63.82 Coca-Cola. If you look at the 0.26 delta for the put side, we're looking at the 62 strike price.
Hmm.
So if you want to think about it long term here, you're able to buy Coca-Cola a little bit cheaper than the current price. Instead of
Hmm.
63.82, you can buy it 62. So you're getting a little discount for it, right? And then you also get some premium coming in to adequately take on the risk that you're putting in for it. Now, the
Right.
payout is not going to be that much on these, maybe 0.45 or so. So you're looking at a little under 1% on your money in 25 days. However, if you do this consistently with the dividend type stocks, eventually you might get a sign on that 62. Then you'll be collecting the dividends every 3 months. You could also sell the calls against it at a higher
Mhm.
price than you're buying it at. And that's a good long-term play in general.
Yeah. I mean, what are you doing in your Roth? Are you implementing any of this stuff
Yeah, the
currently
main
or?
one I'm doing it with is, this realty income. They're a real estate investment trust or a REIT. So
Uh-huh.
what they do is they own the land and they own the buildings for a lot of the bigger companies. Like they own the Home Depot warehouse, they own the Walmart building, right? And then these other big companies, they don't typically like to own their land, but they like to do long-term leases. So this gives them a little bit more flexibility in their budgeting and financing.
Hmm.
So essentially, they're just collecting rent checks from the Walmarts and Home Depots and really big companies out there.
Okay.
I've been doing this for a few years now with realty income. Right now, it's at 64.41. I'm just on the
Is that the
covered
name of
call.
Realty Income?
The what?
That's the name of the company's Realty Income?
Yes, it's just ticker symbol O. Just type in O in the.
Just the letter O.
Yeah.
Okay.
So what's
Huh.
good about this one is they pay monthly dividends. Pays about a quarter, I think, per month per share.
Hmm.
Instead of quarterly dividends, they pay monthly, which is also just a neat benefit. It doesn't really
Yeah,
matter much in the end, but at least it's there, right?
exactly.
And if you look at the
Hey,
dividend history, it's amazing.
the other thing, Lance, like for what you're doing in your Roth, do you post it anywhere or like
Yeah, that
to?
goes under the Lance's trades in the Lance's trades column in the very bottom of the inner circle.
Okay, so it's under Lance's trade, and do you differentiate between like this is my Roth versus this is like a non like another
Yeah,
brokerage
I'll
account?
usually mention like I'm doing this covered call on the Roth. So
Okay,
for
cool.
realty income, I usually go a few months out. I'm not going to do it every month because it doesn't really pay that much.
Right.
So if you look at say realty income, I think I'm in one for February, but I already started it about a month or two ago.
Hmm.
So if you look now for February, stocks at 64.40. I usually sell these a little bit lower delta because I want to keep the shares. And long term, I don't really want to lose the shares in case it runs up. So I'll look around zero point 0.1 to zero point 0.2 delta. And in this
For
case,
Realty
you
Income.
sell about the 70 call. So the 70 call
Okay.
here, about 53 days out, zero point 0.1 delta. You would get another $25 or so, which is pretty much another dividend payment.
Yeah.
And you're getting it at a 70 strike price. So if it does run up past 70, you'll be pretty happy because you're selling your shares at a higher price than you currently bought it at.
Right. Exactly. So, and are you just doing cover calls? Or are you doing some cash secured puts on it
Not
there?
for this one. If there's a
Okay.
stock that I'm considering that's a little overvalued, I would sell the cash secured puts a bit further in the money, as long as it's paying me about 1% a month. So then if you average that out, you're getting 12% in the year.
Mhm.
I haven't
What's
found any
for that
on top
real
of my head right now on it, but I'll definitely be looking into them.
for that Realty Income? Where's the 52 week range on that high and low? Is it moved a lot or not
It's moved
really?
a decent amount. I mean, a lot of stocks have moved. It went from 75 to 55.
Wow.
Now
Okay.
it's kind of near the middle of the yearly range right now, 65 or
Okay.
so.
Okay. Okay. So you post those, so I can be on the lookout for that
Yeah.
too.
Now, for my
Uh,
Roth, I'm only going to be putting in 500 a month into them. So a lot of times I'm just going to be buying into longer term holdings. And then if I happen to
mhm.
have enough money for it, like this would take $6,400 in order to get 100 shares. So that's
Yeah.
pretty much a whole year of work right there in the Roth in order to do that.
Yeah.
So that's why a lot of them are pretty much set in stone for me until I get enough money for another one that I'm doing. But realty income's the main one where I do this strategy. And you could consider, again, either buying the shares outright and then selling covered calls. I'll sell them a few months out instead of 1 month. And
Hmm.
then zero point 0.2, zero point 0.3 delta if you like. It's going to be a higher price than the current price. And then it helps boost the dividend. You get a little bit of capital gains if you lose your shares too.
what kind of percentage dividends have you've been getting like over a course of a year?
Um, in terms of percent or amounts,
Or just a percent of your purchase price or amounts? I
I
mean,
think realty
what are
income's
they
paying, realty pays about 0.225, pays a quarter a month per share. So
like
take
like 3%?
0.25 divided by the current price. It's about 4%. Yeah, 3.88%.
Okay,
BYM is another big holding.
what's
This is
that?
just a real, this is just the Vanguard high yield ETF. So they hold a lot of different dividend companies in it. And I typically buy one or two shares a month on it.
What was the ticker on that?
VYM.
VYM.
Yes.
Okay, and that's Vanguard.
Yeah, it's a Vanguard high yield dividends. They're paying about 3 something percent.
Hmm.
So what I like about this one is it holds a lot of different companies in it. They have pretty good, strong growth. No, sorry, pretty strong dividends in general.
Hmm.
We can find the list of all the companies in it. It might just be. I'll send it on the chat. So this is, you can look at individual stocks in this list if you wanted to consider individual stocks, or you can just do VYM itself. Obviously, it's a little pricey. If you're gonna put in about 500, 550 a month into your Roth, then you could buy a few shares of this a month if you wanted to. Or you could just slowly build it up and buy like one or two shares. That's what I've been doing. And you can see all the top 10 holdings. You probably heard a lot of these before. These are more the blue chips. They're going to be, again, giving those steady dividends over time.
Okay.
Yeah, this
Yeah,
is
I'll
a
take
good
a
way to
look at.
go
I'll
for
take.
medium slash long-term holdings.
Okay. And then Lance, like on the, like you said, if I listen to recording, will those hyperlinks will not be live, so I can't go back and
I'll just post it
you
on your
know.
Discord right now so you can see them
Okay,
quickly.
great.
Yeah, I'll be there. Um,
Yeah, so you have two things, what Motley Fool and then CBS Market Watch or whatever. Okay.
yeah, this gives you an idea of many different companies. So let me take out the whiteboard real quick. This is how I would probably approach it. So you're gonna have your, you could either start with the covered call. So you essentially buy your shares and then sell your covered call. So you could buy 100 shares if you want, and it might take a few months to get there. Like obviously, if it's like a $40 stock price, you're gonna have to get $4,000.
Yeah.
You either buy 100 shares, and then I would sell the covered call. It's hard. I'm trying to use my finger. It is right here. Sell a covered call. I would go about 3 to 6 months out. You don't have to be worrying about this every month and oh no, what happens to the stock? Because these dividend companies, they're not going to pay a ton in the premiums. So you might as
Right.
well just go a few months out on it. I like around 0.2 to 0.3 delta. And then there's really only two things that might happen in the end of this contract when it's over. Either the stock's below your strike price, that means you kept your premium and you're just going to be able to do it over and over again, or you would have to lose your shares, right?
Right.
Now, luckily in a Roth IRA, it won't matter too much if you lose your shares because you're not having to pay taxes on any of the gains.
Right.
And that's an ideal place to put this in is the Roth IRA. So then it's not, again, not a big deal. You just do another one. So if you lose your shares, so let's say you lose your shares, you're going to be getting your money back into your brokerage, right? So let's say you sold a $40 call, the stock goes to 42 or so. You'd lose your shares at 40, then you'd have $4,000. What you could do is go back to this, and you could buy 100 shares of a new company that's in one of those lists if you want to. If you think the stock is still appropriately priced, you go back to the same one again, and then just cycle it in over and over again. Okay. Now, another way you could go if you don't like the stock too much at the current price is you could sell a cash secured put first before you buy the 100 shares. And then you should look into how much is that paying per, around a 0.2, 0.3 delta, about a month out if you want to on those. Okay.
Mm-hmm.
You could even go 2, 3 months if you want. There's nothing really wrong with that. But again, if you get like 1% in your cash, selling a cash secured put on a pretty stable company, it's a good long-term play in the end.
Hey Lance, where's a good place where you could, like, does Yahoo Finance have all the deltas on the options, or what's a good place to like see all the deltas for each strike price?
Yeah, I'll just go right on Thinkorswim, the brokerage.
See,
What
yeah, I have a TD Ameritrade account, but I actually don't use Sink or Swim a lot. Yeah, I mean, I
right.
just use the actual, but
You
I
could use
guess I
it
could go
directly
on there.
on, I think directly on the website, it would show the deltas. I
Okay,
haven't done it that way before because it's a lot easier just to look at it. But I just
okay.
go here. So if you look at, I don't know if I'm sharing my screen right now. Let's see.
I still see the whiteboard.
All right,
Okay,
so this is
okay,
Thinkorswim, right?
okay.
You can type in any of those tickers from the list, like, I don't know, Pfizer, PFE. I'm just gonna pick random ones here.
Uh-huh.
5183. On the trade tab, you could go, if you're going cash secured put, then I would just go on the put side right here, and
Mm-hmm.
then just look at the delta column right here. So 5183, let's say that you like the stock, but you don't want to buy it at this price. Maybe you want a little bit of a discount. You could sell the $50 cash secured put.
Mm-hmm.
It pays 1.34, which is about almost 3% of your money. You just take how much you're taking in, 134, and divide
Mm-hmm.
it by the strike price, 50.
Mm-hmm.
You get 2.6% in your money in 53 days, which is a good return for long-term growth, right?
Mm-hmm. Mm-hmm.
So things like that is what I would look for. It's a little
And
bit
Lance,
higher
what
in the delta, but it's still, you get a good return on it. And then if,
which column is the delta? The third one over, the third column.
yeah, right here, delta. You could
Uh,
change it on
no,
your
I see. Where you pointing? I'm trying to follow you right now.
right here. See the delta?
No, I don't see it.
It's where my mouse is.
I can't see your mouse right now.
Oh,
Okay, there it is. Okay, now I see it. Now I see it. Okay, which one? It's which?
so here's the delta. Here's the
You know,
delta. I was just looking at
hold
the
on a
50
second. Part of
strike.
the problem is that I see it. Okay, forget it. My video screen with me and you on it was in the middle of the delta. I see it.
Oh,
Okay.
okay.
That's why I couldn't see the column. Okay, I see it. Okay, so it's right there. There's a column. Okay.
Right,
So the 50's at what? It's a 0.36. Yeah.
right.
Okay, I see it. And
Yeah,
that's
so
on
that's one to
Thinkorswim.
consider.
I have that on my phone. I'll play around with that.
And then if you like the stock the way it is currently and you think it's appropriately priced, you can just buy your 100 shares. And then I'd look at the call side on the left side. So here I'd look maybe 81 days out. Again, nothing, you don't have to be super active with these. I'll
Mm-hmm.
look around 3 months or so. And then I would look around zero point 0.2 delta or so. So
Mm-hmm.
you could sell, let's say the 757.5 strike. It's a zero point 0.2 delta. And you would get an extra $65 or so. That's between the bid
Mm-hmm.
and the ask price.
When Lance, how do you when you go to pull the trigger on these? So how do you do you go in the middle, down the middle, and do like a limit, or how do you do it?
Yeah. So I would start at the ask price or really close to the ask price. Try
Okay.
to get filled there. If you don't get filled in about a minute, I would go down 1 penny and just keep
Okay.
going down a penny until you get filled.
Okay.
I mean, that's the way I do it because you never know. Maybe you get an extra buck or two that way. Can't
Yeah.
hurt to try, right? Like, what's the worst that happens? You don't get filled.
You don't get filled, so you would got to edit your
Right.
order. Okay. Yeah.
Hopefully Schwab owns CD Ameritrade and Schwab lets you do what's called a walk limit order, where it'll automatically try to fill at a certain price. And then if it doesn't fill, it goes down a penny whenever you tell it to. So hopefully they'll allow that soon with TD Ameritrade. I think they will, but it might be in a few months or so.
Yeah, I don't know when that whole consolidation takes place. I
They've
think
been
at the end
they've
of
been a lot
this.
slower than it should be, it seems, because
Yeah.
it should have been done by now. But yeah, so
Okay.
again, long-term holdings go around 3 to 6 months out, and then a lot of people do well on that. I've talked to a lot of members where, they're already near retirement. They don't want a huge amount of risk with the very high IVs and the super meme stocks. I would stay
Hmm.
more with those, stable blue chip type dividend growers.
Okay. Okay. Makes sense to me.
Any other questions you have?
I'm trying to think, not off the top of my head. I mean, so that's the game plan. I should probably go with the Roth, pretty much, right? Yeah.
Yeah, I would say a pretty high percent of dividend growers and just try to eke out a little bit more from just buying and holding the shares by selling those covered calls really far away. So
One, and
essentially,
one.
for like a dividend company like Pfizer, it pays about 3% in your dividends, and then it might grow another 5 to 8% in the dividend growth per year. And then long term, it might grow another 3 to 5% in the share price a year.
Mhm.
So for very long term holdings, not necessarily year to year, but if you held it like 20 years, you'd probably get that 3% dividend. You'd probably get a growth of that dividend about 5 to 10%, and then the share price grows. And then long term, that's how you do really well, especially if you're able to reinvest your dividends into more shares of stock. So that's another thing to consider. When you sell your covered calls, that money
Mhm.
goes into your brokerage account, and then you could do many things with it. It's your money, right? What you could
Mhm.
decide to do sometimes is maybe buy an extra share or two, quote unquote, for free because you're
Mhm.
getting in that money from the
Right.
dividend, from the premiums, right?
Yeah.
It's not technically free, but it looks like it's free because you're selling a call at a strike that you like and you're taking in money for it, right?
Exactly. Hey, one other thing that you said, you're close to retirement, you wanna minimize risk. What do if we have like a major correction, like what would be like the risk management type of situation appropriate for someone in my situation?
You
You know what
should
I
probably
mean?
have a little bit in bonds, I would think. I wouldn't do 100% of the stocks because the bonds are paying pretty decent yields already. And if the market keeps turning south the next year or two, bonds will pay very well. And it
Yeah.
also, it's more of like a defensive play to like kind of cushion the blow if it drops a lot. But in general, holding these dividend blue chip type stocks, I think are a good defensive play in general. They're not going to be shooting up as much as these growth stocks whenever the market's good, but they also won't be tumbling down as much when the market's bad. So you can look at defensive type like consumer staples stocks, Clorox, Procter Gamble, a lot of the pharmaceuticals. Like those aren't going to dramatically move a lot from year to year because everyone's going to
Mhm.
keep needing their Procter and Gamble, bathroom and kitchen stuff and whatnot. So
Right. So so what I was getting at too is like, is there a place or whatever where you could just say, hey, you know, this may or may not be the bottom. I just want to get out or hedge it in a way, maybe buy some puts or something on the total market just to hedge it.
you
You know
could
what I
with a
mean?
small, yeah, I would do it only with a small percent of your account though. I wouldn't be dramatic on that. So
Hmm.
maybe 3 to 5% of your total account, you could do that because if the market just turns up, then you just lost all that when you bought a
Yeah,
put, for instance. I don't
yeah,
personally like buying hedges, but I know some people like, especially if you're going to need the money in the future, you might want to do things like that. But in the growth stage, I wouldn't necessarily bother.
yeah. But I'm just thinking of my situation because I'm in a whole different area than a 30-year-old. You know what I
Yeah,
mean? Or a 35-year-old. If they get a major correction, they got decades to come
yeah,
back. I don't, you know.
yeah. Yeah, more defensive, the dividends, everything that we've been saying today is pretty much more defensive for market corrections. But you should have some in bonds, I would think. Some in real estate investment trusts. They do work a little like stock, but they're gonna cushion the blow a bit because they pay a large amount of their profits in dividends. So even if
Hmm.
the market drops a lot, the REITs usually don't get hurt as much. I mean, that's not always going to happen, but it's another way to
Mhm.
diversify.
Yeah, I'd have to just look at the REIT, like what are they like? What are they investing in? I'm a little sketchy of the commercial real estate
Yeah. I
because
mean,
all these leases are coming up and people are working remote, and I don't know how the future is going to be with commercial real estate.
yeah, you could do individual real estate investment trusts that only do certain avenues, like SCAG does industrials. So they own the
Uh-huh.
warehouses that Amazon uses.
Yeah, like
They
that
have,
realty you said. Yeah,
they have some that do data centers, like Iron Mountain, IRM. They hold like a lot of the paper and recordings that a lot of companies need for storage and stuff like that. So you could be
right.
very specific about what type of real estate company you want to look at there. Um, if you want to just keep broad base, you could just do the Vanguard one. I think it's R. I forgot the symbol RVM. I think no R. I forgot what it is. Vanguard. VNQ is the Vanguard one.
VNQ,
Yeah,
and
that has a lot of different stocks that are real estate companies.
mhm.
So it's going to have some of the commercial, but it'll have some residential, industrial, and data center, and all these other specialty REITs in there.
Yeah.
I like
Okay.
personally doing individual REITs that I believe in. So the ones that I have are, I'll put it on your Discord. Um, oh, Pine is one I just got into. They're very similar to O, but they're smaller, so they're possibly have more growth aspects.
Mhm.
MPW is a pretty riskier one, but it's for hospitals. They own the actual hospital buildings, and then they lease out to the companies that run the hospitals. They're paying a very high dividend right now, but it's a little bit shaky, so I'd be careful on that one. Let me
Mhm.
think.
Are you putting these on our Discord?
Yeah, I just
You
typed
said?
them in.
Okay.
One that I'm looking at is RQI. They're a closed end one. So that means that there are actual investors in the company, like the researchers are picking the companies to put in that. They do a little bit of leverage on it. So they are
Mhm.
taking out a little leverage to buy a little bit more shares. But it has a good long-term track record too.
Okay.
All right, got a few more minutes. Any other quick questions?
No, I think I'm good, Lance. I'll let you get the building.
Oh
You
yeah,
know,
I gotta build that thing. Ah,
how long is it going to take?
it'll probably be all day. These things are ridiculous. It's like 20 steps, and you gotta screw them in, and you gotta
Oh yeah,
put all those things, and you gotta use the dowels.
yeah.
Like I just hire somebody to do it for me, but I guess I'll just do it.
No, I hear you.
All
Sometimes I
right,
feel the same way. So, but hey, I appreciate your time today, Lance.
no
Greatly
problem.
appreciate it. And I'll
All right,
I'll, I'll keep looking on the inner circle, whatever, and to
yeah,
see what you're doing on your Roth, and then I'll just get a game plan. First I got to come up where I want to go with transfer to brokerage account. So
right.
I'll have to think through that. But you have any like suggestions or whatever?
For what brokerages?
No, like if I wanted to transfer that Roth to a brokerage, I have it like at basically like a mutual fund company right now for years. You know what I
Yeah.
mean?
I mean, I use Schwab personally. My wife uses Vanguard. If you want to keep it pretty stable, you could pick one of those, or Fidelity is fine too. If you're not going to be trading a lot on it, I would recommend one of those big brokerage houses like that.
Yeah.
But
Okay. Okay.
there's a
So
lot of brokers that will work. I was thinking about doing the Tasty trade for my Roth, but that's a little too risky for me, so I decided not to. You
what
can
what
actually
what
do all
trade?
the you can actually do all the future stuff that I've been doing on a Roth IRA.
Oh,
It's
really?
I'm considering it, but I don't think I'm going to end up doing it. It's more
Yeah.
for like long term anyway. So I'm
Yeah.
just going to be
Exactly.
adding money into the Tasty Trade brokers anyway on my own and see how that
Yeah.
goes.
But what do you use them for your trading, like your futures and stuff?
Yeah, futures I'm using Tasty Trade. It's a really
You,
good brokers for Tasty for futures, and the commissions are lower.
Tasty trade.
Yeah, and I
Okay.
use Thinkorswim for the regular spreads. So this, yeah, put credit spreads and whatnot. I use Thinkorswim.
Okay. Yeah, which is like TD Ameritrade. I wonder what they're going to do with when that goes through with the whole Schwab thing. What are they going to keep? What are they going to eliminate?
Yeah, we'll see. I'm not sure. Hopefully
Yeah.
they'll not make it too crazy.
Okay.
All right.
Okay, Lance. Hey, appreciate the time. I'll be watching and Happy New Year.
Oh, all right. Happy New Year. Thanks, sir, coming on in, and I'll send you the recording when it's ready. Probably be a few hours.
Okay, yeah, whenever, and then you put all those links and tickers
Yeah, it's
in the
in your
Discord.
Discord. If you check your
Okay,
Discord.
I'm actually charging my phone right now, so
Okay.
I haven't looked at it. So okay.
All right. I'll talk to you later.
Okay, thanks. Hey, Lance, one more thing real quick. Like, what if I like wanted to talk to you like down the road? What do I do? Just Discord you? Just say, hey, do
Yeah.
you have any time coming up?
Yeah. Same way.
Okay, sounds good.
All right. Have a good one.
Happy New Year.
Happy New Year's.